GST Tips Week 25. Input tax credit availed on provisional basis has to be reversed if the supplier has not paid the input tax credit along with interest for the period from the date of availing input tax credit to the date of reversal of input tax credit. The same can be taken if the supplier pays the tax, but in the new GST law release looks like the interest paid will not be allowed to the recipient, which means the cost. As per the revised invoice rules, delivery challenge can be issued in place of tax invoice during the transportation of goods for job work or for repairs of machinery, or in the case of supply of liquefied gas, or as may be notified by the GST Council from time to time. As per the revised invoice rules released on 1st April, now special characters like slash or dash are allowed in the numbering of the tax invoice in GST. It is also clearly mentioned in the rules that multiple series can also be maintained for tax invoice numbering in GST. A special provision is provided in the revised invoice rules, wherein the supplier of goods can share the same in different consignments in the case of transportation of goods in a semi-knocked down or completely knocked down condition. Complete tax invoice has to be issued before the removal of the goods, and endorsed copy of the tax invoice should be accompanied with all the consignments along with the delivery challenge. The original copy of the tax invoice should be sent at the time of final removal of goods. In the revised invoice rules, the time limit for issue of tax invoice is given as 30 days from the date of supply of service, and in the case of an insurer or a banking company or a financial institution, including a non-banking financial company, the time limit is 45 days from the supply of service. Input tax credit availed has to be reversed as output tax liability if the supplier of goods or services is not paid within 180 days from the date of issue of the tax invoice. Input tax credit with respect to a banking company or a financial institution, including a non-banking financial company, engaged in supplying services by way of accepting deposits, extending loans or advances, have an option to claim only 50% of the GST taxes paid as input tax credit. Alternatively, they can avail input tax credit to the extent excluding the services used for exempted supplies.